I finally found a spot with GBP NZD. Like, I did not believe I would find any spot. I was working in the office and it was not easy. And I just wanted to unwind. So I took my laptop, went out of the office, went downstairs and said, okay, let's try and unwind. Let's see if we can look at the markets and, use Forex to unwind. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9 to 5 job is like. This is literally the whole shebang. There is no hiding anything, there is no pretending, there is no extra editing, there's no fini family. It's just seeing the real raw experience, seeing your trades go straight into profit, seeing your trades go into profit and then go back to entry and stop loss, seeing your trades go straight into stop loss. That is what this channel is all about. So I've been watching my tutorials again to get the exact direction that I should be going, right? And I think I have diluted my understanding. So I was watching the tutorials and I started to learn some certain things that I think I have personally thrown away over time. One of the things that I have thrown away is the real thing is that we are trading a direction, right? I'm looking outside because there's something outside. But the real thing is we are supposed to be trading a direction in the market. You're not trading because you think you know the market. You're trading because you kind of understand what the next candle wants to look like. So for people who are scalpers, they are literally trying to trade what the next 30 minutes or the next 15 minutes or the next 1 hour candle is going to be. So it's the same thing on the higher time frame. We're just trying to trade what the next weekly, what the next sets of daily candle and what the next monthly candle is likely going to be like. That's what we're trading. And right now, I entered the trade yesterday, GBP NZD, finally put myself out there again to place a trade, and it was unbelievable, man. It was unbelievable. I placed the trade, I left my laptop, and I just went off. And then I came back, I saw it moving in very, very beautiful profit, like absolutely outstandingly beautiful profit. So right here is the trade. The trade opened at 11 p.m. yesterday, 11 a.m. Sorry. I think that this trade is a 4 hour trade. I'll put it up full screen, right? At full screen, it was around 11. So I placed this trade. It was a pending order, basically. It was a pending order trade. And I just placed the pending order of this trade. So the premises, the technical analysis behind this trade is on the monthly, right? On the monthly, I remembered, okay, let's try and see if we can trade direction of the markets for the monthly. So I looked at the monthly candle. I look at the monthly structure right here, and I'm not seeing any, should I call it, fair value gaps imbalance. But this is a clear push that this candle is a clear push for demand and supply that if you look carefully, it means the market is willing to go higher. So if it's coming back down, it's just coming back to come pick up liquidity somewhat. So I then, looking at the monthly, right, I jumped into the 4 hours like this. And on the 4 hours, as at that time, I had not seen this. So let's just take this out. Let's take this, or let's take all of this out. This is perfect. So this is what I saw. So when I jumped into the 4 hours candle from the monthly, right, I just looked straight, where did February start? Right here. So I'm asking myself, if the market is looking somewhat like this, right, the first candle of January looks like it's pulling back for the demand zone. It has entered the normal demand zone, but it hasn't entered the like quality, or rather extreme quality demand zone, basically. So I said, if it hasn't entered that zone, let's see what's happening on the 4 hours. So on the 4 hours, we saw this beginning of the month go up, come down like this. and then it's coming down. It has gone up, was going up again, right? This was what I saw. So as of yesterday, around 11 a.m., that's somewhere around here, somewhere around here. Was yesterday 14th? Let's see. Yesterday was 14th. Yes. So it was yesterday. Oh, Valentine's trade. Yeah, it's a Valentine's trade. So if we should go back candles, it was around here when I saw this trade. It was around here. So as soon as I saw this, my head instantly thought of two things, right? Now I'm not a demand and supply trader. So I thought about this. This is what I saw. So, but this is not what I saw. This is what I looked at. So I was like, I think this market is sinking. And if it is sinking, and there's a possible reason why it should be sinking. Then I came onto the weekly and, MMC kicked in. MMC kicked in. I saw my weekly fair value gap, which is the weekly structure I'm always looking out for, monthly and weekly fair value gaps. And then on the weekly fair value gap, I saw the first candle rejecting, which was, which you see right here. So the first candle got swept and price came back down. So if I remove all of this, you see that the second candle, this third candle is not above the second one, but the first one got swept, right? Got swept. So I went down into the 4 hours again, and I was like, what is happening after this high? So this high, we saw this, you can see it's actually right there. And then I saw this other fair value gap, as you can see right here. Something is wrong with my PC, I think. Okay, it's the mouse. Mouse is lagging. Okay, so and then I saw this in and out. So when I saw this fair value gap in, fair value gap out, meaning is a sharp turn, right? I expected this high to be protected. So I told myself, if I see a clear reason as for price to start going downwards, then there will be one major target in this market, right? There will be one major target, which will be here. There will be one major target, which will be here. This was around past 9 in the morning. And then I saw this candle. I was looking at this 1 a.m. candle. I was like, this 1 a.m. candle clearly shows price is finding it difficult above this level. It's not getting towards this candle. So this low, if I should put it on the monthly, this is the monthly low, meaning this is the lowest point of last month. I said price is definitely finding its way towards this direction. Hence, what I did was I decided to take a short trade. I decided to short the market, a short position. Right? I decided to take a short position starting from right here. Then I'm right here. And I'm aiming for this low. Now, I'm not actually supposed to aim for this low. I'm supposed to aim for somewhere around here, because this is where the liquidity really lies, crossing this place and most likely come in here and bounce back. That's what I actually expect. That's what I expect from the market. But basically, this is my whole premise. And then I saw after I entered the trade, I'm seeing this fair value gap, And I can say for sure, right? For sure, it is most likely going to get here first and foremost. And if I should take price back here, you'd see that it's already a 1:1 or 1.47 for me. Now, on this trade, I am only risking, as usual, 0.5% of my account, 0.5% of my account. And you can see right here, 0.5% of my account. You can see 0.44. I was supposed to do 0.5, but I couldn't find an exact 0.5. So I just placed it right there because that's where my stop loss is supposed to be. And I just had it there and said, all right, let's just go with the lot size that is closest to my 0.5 and let's run this market. So by the time it comes here, if it comes here, I'll be scaling in, taking out 50% of the, taking out about 50% of the trade, and then taking my stop loss maybe to entry or to the best, safest point I can see in the market. That is my trade for yesterday. So basically, it is just the usual. It's a discretionary trade. That's the truth. It is a discretionary thing. It's more of using your understanding of what you're seeing in the market and then just trading it. That is my trade of yesterday. Yes, it is a demo account and I am trying to learn how to trade. The best advice I ever got is trade demo until you become profitable, and then you can then start doing prop firms or live trading with your own account or whosoever can fund you. But trade demo till you're good enough, and that is what I'm doing. And I advise any other person out there who is learning Forex, trade demo. It is not bad. It is literally a learning surface for us. So I'm doing demo and I'm trying to understand technical analysis first, price action, and then fundamental. So I'm no longer going to be jumping. I'm no longer going to be jumping into fundamentals all the time. I'll just what is really important is understanding the technical side, and then as time goes on, I become better. I would dive into fundamental analysis. So that's it for this video, and peace out.